Hello, everybody, whoever's watching. Thank you for joining, tuning into my video. My name is Nagman. I'm going to be talking about my 2025 option selling journey. I want to go over my portfolio, what that looks like, where I'm at year to date. I'm going to talk about some of the progress that I've made selling options, how much capital I'm using, what the return is so far. And I'm also going to go over, the most common tickers that I've been selling options on. Man, it doesn't really, option selling doesn't really mean that I'm only doing cash secure puts, but it's also that I'm also doing covered calls. So let's get right into it. So I mainly do option selling in Robinhood. This is a normal brokerage account. Although I do a small amount of option selling in my Roth IRA, which is also with Robinhood. I'll probably make a video on that at a later time, but this is my regular brokerage account. So as you can see, we're almost at 100K year to date. I am up 10.5%, which is about outperforming the S&P by 8-ish%. So hopefully I keep this up, and if I can beat the S&P by the end of the year, that would be awesome. Um, and it's a one common thing that I always get from people is that if in a year, let's say I only match the returns of the S&P, then so why are you selling options so active? You're better off just putting your money in a S&P 500 index fund, and you make your money that way. Fair. That's not bad feedback, but the only reason I even got into this in the first place was because I had a bunch of cash sitting in my checking account, and I wanted to use that cash to generate more cash than what your average bond was giving. And at that time, it was about 4.5 to 5%. And what I wanted to see was um, that if I transfer my money over to a high yield checking or savings account or a brokerage account, because even at that time Robinhood was giving 4.5% yield on the cash that was deposited. So that was my main motivation of actually keeping that cash in there to earn yield on there. And the bonus on top of that was just using the cash selectively to and very conservatively to sell options here and there to generate extra cash. So if I can double that 4.5% yield, in my mind, that's a winner, because if I'm not doing that and keeping that in my normal bank account, I'm not earning anything on it, right? So automatically I'm earning 10%, which is great, because this is not the money that I was looking to really invest anyway. This is really to generate cash, and then furthermore use that cash to buy more assets. That could be more stocks that I could sell more options on, or eventually gather enough to even get for another house down payment. So options are very, very fast. So to go further into this, so as I also said, the account balance is 99.9K, almost at 100, hoping to crack that and stay above that soon enough. Hopefully there's no hard corrections. But either way, whatever happens, we take it as it comes, right? That's the risk of being in the equity markets. So talking more about this image right here, the buying power. It says 76K and some change. That's actually counting margin. I actually don't have this much buying power. I have the margin as a safety measure, but to date I have not gone into using margin, and I will talk more about how much capital I started off with and where I'm sitting at right now. So I was talking about the total capital that I started off the year with was 72,000, And using that, I have collected $6,751.02 of premium so far. And from some of the extra cash that's not actually being used to sell options, I've also earned a small amount of interest on that cash, which brings a total to $7,146.09. So yeah, sure, bunch of numbers, right? So couple other numbers. The ROI here is almost 9.9%. We're halfway through the year, and I have generated almost 10% on my initial capital, and that's only 6 months into the year. So 171 days since my first trade of the year. And to cap it off, I like to see, like on a per 7 day basis, how much am I earning? So in like equating it to almost a week, what is my weekly earning with premium plus interest, and what is mine earning if it was premium only? And you might be wondering, like, like why do you need to do both of these? And the reason behind that is I'm not expecting this 4% yield to always be there. Once sooner or later it's going to be gone. I know I said like that was my initial motivation, but since then I've acquired the skill to generate a lot more cash, and it's just a luxury at this point. It is there. It's not going to be there in the future for sure. I don't know how far down that would actually be, but this is the real number that I'm actually um, shooting for, because this is actually what's saying like how I'm doing as far as collecting premiums. So there's that. And next thing we'll get into is the most common companies that I've been selling my covered calls or cash secured puts on in this year. So you can see most of my biggest hitter is AMD, TSLL, not Tesla. This is a 2x leveraged Tesla ETF. It had some utility when Tesla was really being down. Instead of buying Tesla stock, I decided to sell some cash secured puts on the TSLL ETF, and generated a good amount of money there. PayPal is another one. I did a few credit spreads on SPX. And Google. So out of these three here, I have actually, so for AMD, PayPal, and Google, I was at some point selling cash secure puts on all of these, and right now I'm actually an owner of 300 AMD shares, 100 PayPal shares, and 126 Google shares. And at some point, when I was selling cash secure puts, all three of these stocks fell way below my strike prices, and I was assigned those early, and I've actually been holding on to those and selling covered calls as time has gone on, and it has done pretty well. So if we just want to quickly take a look at, so this, my snapshot for what I was showing you was here. This is where the data is gathered. This is my spreadsheet where I keep track of all of my trades. As you can see right now, I only have one open trade for AMD, which is I'm actually currently underwater. I initially started this position back in like end of May. Right now we're like in the end of June, and it was almost at that time where AMD decided to rocket up. And since then, I've just kind of been trying to manage the trade, and it's really two contracts that are currently underwater. Um, and I still have one lot for AMD that I have not been selling covered calls on. So that's actually been providing me capital gain. So that's been actually been a pretty nice thing. But I'm gonna keep rolling it. I am not ready to sell my shares. If some time comes be where it just gets way too high, I might just actually let them go and use the cash to sell some secured puts on some other quality name that I really believe in. But we'll see. And quickly, we'll take a look here. So, I'm not faking this. This is my Robinhood account. So year to date, as I showed you, it's 10.65%. I guess it's moved up a little bit after hours. Buying power here, as I was telling you about that, this is not my full cash. This is actually my cash plus margin, which I have not dipped into yet, and I don't have any plans to for that matter anyway. But we'll see. If an opportunity arises, then I will surely take advantage of it. And right now, I have about $16,000 that have not actually been used, so that's sitting there accruing interest. Um, and as I was talking about, two contracts for AMD, one contract for Riot. Actually, I forgot to talk about this. I have a Riot cash secured put for next year. This is when Riot was a little beaten down. I sold one cash secured put out until next year. Collected about a little over 25%. So that was kind of nice. It's just sitting there. It's not like big money, but it was an easy play. It was hard not to turn it down. So where do I see this? Okay, yeah. So I had I got an average credit of $2.20 per contract. And as you can see, so far my return is 42%, $94. It's just going to sit there. Money wise, it's not a big amount, but percentage wise, because that's the real key, that's where it actually makes a huge difference. Because anything that you can master at a smaller scale, you can always scale up as long as you're doing all the right things. So just going over my holdings a little bit, I hold a very tiny amount of Bitcoin, Ethereum, Ripple, AVAX. I don't even know what this is, but I got it as a award. So yeah, so AMD, as I said, 300 shares of AMD, Google, PayPal, have a couple other names in here: Coca-Cola, AbbVie, SCHG, SCHD, a little bit of VTI, VGT, StoneCo. This has actually been my best performer for the year, even though I'm down on it all time. So I'm down about it, 10%. But year to date, man, this thing has been killing. So almost 90%. I wish I was buying a little bit more while it was down, but it's no big deal. Still a good performer. I like the company. It's a Brazilian fintech market segment leader in that region, so it's pretty solid. And then we start to get into some of my bad investments uh, over the years. So Snapchat, kind of down big on this. I haven't really added to it, but I'm not ready to sell it either right now unless I look to do a tax loss harvesting. But right now it's not the time. I'm not really interested in that. But my average cost, as you can see, was $20.80, and right now Snapchat's sitting at $8. Yeah. Now that I look back at it, I'm like, what the heck was I thinking? Anyways, so Pepsi, right? Pepsi is one that I've been buying lately. So the premiums that I'm collecting, I'm dumping that into Pepsi at these levels. I'm only down about 1%, so my average cost is 130 bucks, almost 131. It's right around the same, so not a huge thing, but it's it's paying about 4.2%, which is almost as good as owning a bond at this time. But you also participate in the upside and also the downside too. But I'm any company that I'm buying into, I believe in it long term, and I'm not looking for a short term turnaround. If I do buy something, I'm looking to at least hold it for anywhere between 10 to 15 years. As granted, nothing major changes. So locking in that type of yield for a quality company like Pepsi is pretty solid. And that's pretty much it for me. I wanted to give everybody a overview of my 2025 journey. Hoping to keep you guys up to date on a weekly basis. So if you enjoyed what I had to talk about, and if you have any questions regarding what I've been doing this year, what my plans are going forward, what quality companies do I are still on my radar, or like if something I'm not considering and some things in front of you, give me a shout, man. Let me know in the comments. Let me know what I could be doing better. Let me know what you're doing, so maybe we can exchange ideas and help each other out. But either way, if you've listened up until this far, thank you. I would appreciate if you hit that like button. And really thank you so much. I really use that as motivation. Um, but yeah, I really appreciate that. I'm not a very good speaker, so keeping trying to keep this as relative as possible, relatable as possible, educational as possible. This is just an overview, but going forward, I do plan on talking through the trades that I'm doing, walking through my thought process. So if anybody's out there struggling or have any questions, let me know. Maybe we can help each other better. So anyway, have a good one, everybody. See you on the next one.